Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for September 8th, 2019. Hope you guys and gals are having a great weekend. Now before we get started, I wanted to mention if you haven't tried out ForexAnalytix, do so. It's only $1 for 10 days. $1 for 10 days. Try it out. And this is a great primer for you guys and gals to try out ForexAnalytix, because next week we're going to be releasing our seasonal offer, and we've got a big one. It's a doozy. There's actually some changes that are coming to our platform. So if you want to try us out early, do so, because when there's an offer, you're not going to be able to try it out. You're just going to be able to take the offer. So like I said, this is the week. If you want to try it out, do it. It's only $1. And make sure you download the mobile apps, whether you're on an Android phone or an Apple phone. Make sure you download the app, so this way you have all of our analysis and all of the updates and all the notifications right on your mobile device. Okay, now let's talk about this next week. This next week's actually, it's a pretty important week because we have the ECB meeting on Thursday. There's not a ton of data coming out for the US. We have CPI on Thursday. We have retail sales also on Friday. So at the end of the week, we're going to be a little bit more data heavy. And by the way, this data flash is included with ForexAnalytix. You get this, which releases the data about as quick as Bloomberg most of the time, and when the data comes out, you can react to it, and it gives you voice cues and all sorts of stuff. So I'm going to move it out of the way. We are still consolidating in the currency market, and specifically, if you look at the euro dollar, and let's go over to the weekly chart, so this way you can have a good view of what happened here. One of the things that I did with the euro last week is I played it right off of this support, and I'm still bullish as long as we're pivoting off of this descending wedge support. Now, in my opinion, we have to break back above 111, which you can see as a breakdown point over here, for the euro to turn bullish. And it's going to be a tough week for the euro to do so, as the ECB may be ready to announce further measures of quantitative easing, if you will, but new measures that might keep the euro capped. However, if the market walks away disappointed on Thursday, we could have the ability of actually rallying past 111 and towards 112, which is, key resistance once you get up towards 112, 112.50. If you remember last week, actually the market was pretty disappointed with the RBA, and you had the Aussie actually rally out of this triangle and push right into this previous support, acted as current resistance, and we actually broke back above that, and are testing the 50-day moving average. So we've seen the Aussie recover as the market was disappointed in what the RBA had to say, and that's not out of the realms of possibilities with the euro dollar going into this next week, especially as as Draghi wraps up his tenure with the ECB. If he is not as dovish as the market wants, or doesn't act as dovishly as the market is hoping for, we could continue to see a squeeze in the euro. So ahead of the ECB on Thursday, ahead of that meeting, I doubt that you're going to get much upside in the euro. You might get, a push into 111, but I think dips below 110 are going to find buyers, and for me, that's what I'm going to be looking for in the euros. I'm going to be looking for dips back down towards 110, maybe below 110, to add to current longs with some euro exposure going into the ECB. But once again, I think 111 is the do or die point when you're talking about the euro going into the end of the week. All right, the cable. The cable's been a tricky animal, and as I've been explaining to you the last few weeks, UK politics to me is extremely challenging and confusing. So there's a lot of moving parts and a lot of moving pieces, and it does seem like Halloween, which is October 31st, when the UK is supposed to quote unquote leave the EU with or without a deal. That looks like it could get pushed out. Now I'm going to let me go over to the pound based on my charts here. As you guys know, I was really looking at the 123, 123 level as very key resistance. What I'm really looking for right now is, see this this pink line. That's the breakdown point. Previous spike low, it comes in at 123.70. I'd like to see that broken here to know that it's more safe for me to be entering longs. I have been playing the cable to the long side, and just more of scalping it and just buying dips, if you will. And you can see this little flag pattern has developed, and actually this could develop into something a little bit more significant, perhaps. But I need the market to tell me, the charts to tell me that it's okay to be buying the cable, more so than me making an assumption based on what I hear or read regarding Brexit. I think there's a lot bigger money that's smarter and more at play here. Positioning is probably still skewed to a pretty bearish, cable. So therefore, the risk of a continued squeeze higher is I still think high. But what I'm looking for personally is I'm just looking for a move above this 123.70 level, really to signal that it is safer for me to play a little bit more aggressively to the long side. But you can see we broke this down channel, and so that's like the first step for me to identify that the pound is trying to make a reversal. And frankly, if you look at the daily chart, this is a long-term double bottom if things really start to shape up to the upside. Currently, I have no cable longs. I took it off just before the weekend, but I'm still playing it to the long side. Pattern wise, for technical reasons, it is still bullish. I'm just looking to buy dips now. So as long as we're above, let's just call it 122.50, somewhere down in this neighborhood right here. As long as we stay above, this broken trend line, I'll be playing it to the long side. Like I said, as of now. Now, a couple other things that are happening as I explained to you guys is the risk sentiment is obviously improving because what we see in the Aussie, like I had mentioned, you got the Aussie, which is above previous support, which acted as current resistance, and that's a pretty major development for the Aussie. And with the protests in Hong Kong kind of winding down, getting out of the picture, with China enacting some further measures to loosen up liquidity at the end of the week, this last week. That's really helped the Aussie improve, and you can see it in the Kiwi as well. The Kiwi has had a nice reversal off of the lows. We had a pretty big 127% extension that I played off of last week, and you can see we're probing all this previous support. It's acting as current resistance, and I think if the Kiwi can get above 64.50, we can see a continued rally in risk sentiment. But we are pushing key resistance here in the Kiwi and in the Aussie as well. But you'll see it in the yen, and I think the yen is a great proxy right now for. Let's go over to the daily chart. It's a great proxy for risk appetite versus risk sentiment, and we had this down sloping channel, and you can see this in all the yen pairs, whether you're looking at the Aussie yen, the pound yen, the euro yen, the New Zealand yen, the Canadian yen. They all had these minor down channels, descending channels, if you will, and the dollar yen broke above that resistance. So that's an improvement in risk appetite, and you can see it in, let's go over to the S&P. The S&P is not too far away from all-time highs. I have, during this last week, I've been outlining the risks of a continued rally in the S&P, and that we have seen. Now we are testing, you can see it right here, previous broken trend line support, so we're testing that trend line once again. But I think the risks are, frankly, that we head to new highs. I think we can head above 3,000 in the S&P and maybe to 3,020, maybe even higher than that, maybe even 3,100, which is the 127% extension of this last move lower. I think those are all risks. The market has been climbing this wall of worry, and I don't know if that's gonna is going to stop anytime soon. With Brexit risks receding a little bit, with China looking to continue trade talks with the U.S., we might see a continued rally in risk. So think about that as you're looking at the S&P and what to do with the yen pairs, like the dollar yen or the Aussie yen. And like I've explained to you guys, I'll just show you really quick. Here's the euro yen, broke out of that down channel. We are probing. This is key resistance right here, comes in around 119. You can see it right there. You can see the pound yen. We have a double bottom. Okay, we broke back above this breakdown point that comes in at 130.65. It targets a move up to 137 and change. You have the Aussie yen, broke that down, descending channel. New Zealand yen, same thing. New Zealand yen is going to be facing some pretty good resistance here at 69.50, 69.30. And the Canadian yen, same thing. Descending channel, broke out. Here we are testing the 50-day moving average. I think the 200-day moving average is a distinct possibility in the Canadian yen. So as these yen pairs continue to rally, that's a signal to us that the S&P will probably continue to retest these previous highs, maybe even to new trend highs. So I think those are the risks going into this next week, and it's going to be interesting to see how the market responds to the euro dollar and the ECB on Thursday, because I think in order for the equity markets to continue to rally towards highs, you're going to have to see further dovish action from the ECB on Thursday. So I think that's going to be a bit of a catalyst. So just remember, we are in the heat of the beginning of the trading season. It's just kicking off. The volatility will probably increase as we get into the end of next week because of the CPI data from the US, retail sales from the US on Friday, ECB meeting on Thursday. Those are going to be the events that probably will be further catalysts for a continuation of the trends that we've seen this last week. I guess one last thing I should point out. Let me just take a real quick look at the dollar index really fast. The dollar index, you can see we had a pretty big reversal off of these. It's this not all-time high. It was trend highs. We had a big reversal here, and the dollar index is going to be approaching some pretty key support. This, you can see this red previous resistance that's going to act as current support. You're going to have a nice little trend line that comes through here, and that all comes in around roughly 97.70, 97.60. Those are going to be some pretty key levels for the dollar index, and if we see that level break, that's probably a signal that the euro is back above 112 or nearing 112, and then we are at risk of a complete dollar reversal. So those are just things that I think that you guys and gals should be thinking of as we move into this next week. All right, and if you like this video, you think it's going to be beneficial for you going into this next week, make sure you give us a thumbs up. It always makes myself and the rest of the team feel better that you guys are benefiting from these videos. And make sure you subscribe to our YouTube channel so you don't miss any of our great interviews throughout the course of the week. And remember, you guys, try out ForexAnalytix. This is the time to do it. Sign up. It's only $1 for 10 days. This way you get to try it out this week before our offer goes live next week. So this way, because remember, when we have a significant discount to our offer, you don't get a trial. you just get to, take the savings. So this is a great week for you to try it out. It's only $1. Do it. All right, guys and gals, thanks very much for listening in. My name is Blake Morrow with ForexAnalytix. I will see you tomorrow on the free face webinar, and if I don't catch you there, I'll see you next Saturday or Sunday on the week ahead video. Thanks a lot. Have a great remainder of your day.